G'day traders, I'm Greg McKenna. Welcome to Markets Morning. It's Tuesday the 9th of October. I'm on the road, which is why I've got the jumper on. I haven't had a chance. I've got some meetings today. Have to go and get ready for those. So I'll just kick straight off. Interesting night last night. Of course, the physical markets in the US were closed, but the futures were open. We saw some funkiness in Chinese stocks yesterday after that Triple R own goal. A lot of us did question why the Chinese were doing what they did. And it seems that the market took a dim view. Now, a 4.3% fall on the CSI 300, a 3.7% fall on the Shanghai Composite. Look overdone by any stretch of the imagination, but there was no, national team there to buy stocks yesterday, and that put some funkiness into European trade. Of course, the Italians still arguing with the EU. Deputy Prime Minister Salvini having a pop at individuals and the EU as a whole certainly didn't help. And we saw some weakness in German and Italian. I think the FTSE MIB was down 2.5% or something like that. More than 1% losses for the DAX and the CAC. As well. We got hosed here in Australia, the SPI 200, but managed to only fall 7 points overnight. We have taken out that low. I'll talk about that. In currency markets, it was really, really interesting. The thing that I found when I looked at my correlation matrices on the weekend was that there wasn't really any strong correlations the way that you might think. It's not just about the US dollar anymore. And so what we've got is we've got the euro and the pound down, but off their lows. We've actually got the Aussie up by 0.4%. Got dollar yen down, but off its lows. It was down with the funkiness in stocks, but came back as US stocks closed higher or were bid into the close, I should say. And so that's really interesting. Copper was down, oil down a little. So much for the gold is stabilizing thesis. It fell $12 or so. But let's just dive straight in and we'll look at the S&P 500 to kick off with. So what have we got? We've got this up move. This little one was broken. These are actually, these long tails are actually quite bullish candles. And I guess the people are coming in to buy the dip again because the medium-term trend, my Jimmy R indicator, which is just the 15 and 30-week EMAs, they're still positive. So it's a question of, buying the dip. But what actually drove that buying in the US is hard to understand. There was some news about Google, so the NASDAQ underperformed. And I think that the pressure will continue to be on that sector. But for the moment, what you'd have to say is that we are having support, but my sense is still that this market will roll down towards 2795. Maybe if it doesn't get there, it might get to sort of 2822 or something like that. But even with the long tails, we've still got 4 down days and lower lows. So you'd have to see this market up and through 29, 13, 15 to change the outlook on that. Going back to foreign exchange now, and the euro off its lows, starting the day a little bit better, 14.90. It seems to be trying to base here. There's an interesting thing, those of you who have been watching my videos for a long time and reading my stuff, I've talked about it in Markets Morning today. The US dollar does well when there's catalysts, but it drifts when they're absent. And that seems to be what we're seeing again. It's interesting if you map the back half of the month compared to the front half of the month when the stronger US data is out. I think you will see, I haven't actually done it, but anecdotally to me, and I know that's not evidence, but anecdotally to me, that is something really interesting. And so it's almost like there's this natural drift of the dollar lower, surprise, surprise, deficits and all that kind of stuff, and that you need the data, you need the Fed. On the Fed last night, James Bullard was saying that essentially he gave 2 messages. One was emerging markets be damned. Essentially, he said that the Fed's been transparent, so emerging markets should be as ready as they can be. And the other thing was that the preconditions for a December hike look like they're there, but he'll talk about, it depends on what the data print. Interestingly, also, Dutch Central Bank and NOT was talking about a January discussion date for the move higher in ECB rate. So that's something really interesting. But at the moment, you can see here just, You really got to break down through 114.30, I think, to start to think about 113. It's still possible, but we're just in a big old box. We are just in a big old range at the moment. It's similar to this range that we had here. So you'd have to wait for the catalyst to break before you get too excited. Looking at dollar yen, naturally, we've talked about this. The MACD suggests still lower levels, but what we got last night was we've got a hold above the previous break. Now, we had a run to about 114.70 odd, which is the top of this region. This turquoise region goes back. We'll just show you on the weeklies. It goes back in a series of highs. So that to me is the range highs that it didn't get through, came back, fell through there. So you got the big move, mid Bollinger Band. So 75.80 on 112 is the big level. You could see a 50 to 70 point rally and still head down through 112, 75.90, 75.80. What will Chinese stocks do today? You'd have to think the national team might get busy, but we'll have to wait and see. Bloomberg reports there was a lot of foreign capital flow out yesterday, and there is upward pressure on the dollar yuan. It's up at sort of 6.92 or thereabouts, so that's going to be important for dollar yen as well. If we look at sterling, the little weekly uptrend, which is characterised by this 3-touch daily trend line, it had a down day but then recovered from the low, so we'll keep an eye on that. Brexit does look like the EU's being more conciliatory, but certainly Theresa May's talking to a domestic audience. Realistically, for me today, you'd have to take either side of that range, so 130.27 to 131.20 before I'd get too bothered. If you drop down to a 4-hour chart, though, you can see inside that that's the same sort of thing. So a break there or a break there on the 4 hours, and that might be a signal that things are going to get busy. In terms of the Australian dollar, it's actually done pretty well. This is the 4-hour charts. I couldn't sell it yesterday. I looked at my charts, and when I'm working from home, I've got about 6 screens up, one of which has got all the 4 hours, and I was just looking at it. It did not look like it was going to go down, and we've seen it rally. I was a bit surprised to see it at 70.80 this morning when I looked at it first thing. What does it say now? Pardon me. It says to me that if 70.80, 7.90 can break, then we can get a run to 71.15 or thereabouts. I've got the NAB business survey today. What is that going to be? That's the single most important piece of economic data that I see from Australia each month because it's just so strong. The dailies are still holding for dollar CAD. This is the downtrend, and you can obviously draw the broader trend there, but keep an eye on that. So you'd have to get up and through last night's high, which was 130.10, to really kick on. So the US dollar was strong, but then gave it back as stocks gave up. So, catalyst of weakness in global stocks, US stocks start to rebound, US dollar loses a bit. It's really interesting the way that's going. The Kiwi did well too. So while dollar CAD was up about 0.1, 0.2, the Kiwi was actually up. So dollar CAD up means CAD down, but the Kiwi was up. Small. And in the grand scheme of things, not terribly much. But like the Aussie, this does suggest that we might see some further gains if Kiwi falls below 64.36. My outlook might change, but overall, Kiwi looks like it might want to go back and test sort of 65.03 maybe even, or something like that. Of course, US bond markets, when they kick off tonight, are going to be terribly important. Moving on to commodities now, and gold. If we move this line, which I have on my other charts, shrink it down so I can get a better sense of it. So you got it down below, but it didn't go down. So 1180 is still the key. I think 83 or thereabouts was the low last night. So it's still in this range. The normal resolution of this kind of pattern for me would be down, but as I said, I wrote certainly yesterday, and I think I said it's 1180, 1220 roughly, 1215 probably at the moment. But if it takes out 80, then you've got a $20 fall But you know, then again, it fell $12 last night on its own. Copper. In markets morning this morning, I've talked about a Bloomberg article where everybody at LME week is bullish. Well, not everybody, but you know, the way that Bloomberg characterises it is that they're bullish. You know, deficits coming, better discipline from producers. The financialisation is, you know, the way I call it. People, you know, go and they sell copper futures because they're worried about the globe. Those kind of things. And so what we saw last night was a marginal new low, but copper is, you know, is back now inside this box, though it does suggest that perhaps this level here would have to break to get me bearish, which is about 270. The low last night was about 273. So it broke 274.50, but didn't hold below on a day basis. If you have a look at the weeklies I talked about the other day, they still suggest higher, but it's got to break up and through 293. At 286.5 would be a signal for probably a 7-cent run towards 293, but we'll have to wait and see. What happens in China and sentiment towards that's going to be really important. WTI is really interesting at the moment. Another long-legged candle. Yeah, the MACD, so the moving together of the averages, the lack of momentum speaks to the potential for further losses. In my terms, I said about 72.14, which is a 38.2% retracement of you know, of this rally. So we didn't get there. We got a low of 73.05 last night. You know, we've got to see how this futures trade goes out. We've got the Indians saying that they are still buying Iranian oil and that they want to get a sanction waiver from the United States. We've got the pipeline, the EPIC pipeline going from natural gas to crude, and we've also got news that China has stopped buying US crude. That's at least for August. I think that might have changed, but I'll have to wait and see. So there's a few headwinds, but not bearish. The overall trend is still higher, but a test back into the 72s does still seem a strong possibility. If we have a look at the MACD, you know, over here we ended up with this type of fall. Over here we ended up with this type of fall. So a false start and then a fall. So we could get another false start back to maybe 75.50 before it falls. So keep an eye on that one. But my balance is back into the 72s. In terms of Brent, yeah, similar sort of story. We've had an up move. We've rolled over. The MACD does suggest some further weakness unless it reaccelerates. So what I'm looking for with the MACD is that the momentum stall. We had a really sharp run. We've broken a trend line. Now we have a retracement. But interestingly, I haven't, you know, I used to talk about this all the time. The 15 moving average, 15 EMA is often a good support, and that's what we've seen in a number of things last night, in particular dollar yen as well. So keep an eye on that one. I've looked at the S&P, so I'll have a look at our own SPY. We've broken lower. We've done all right. So if you expect China to rally today, and I can't show you China 850 because there's a bad tick in this chart. I've spoken to the provider and they say they fixed it, but it's not fixed on my chart. So I'm not sure what to do. I've refreshed it. I've closed it a bunch of times and refreshed it, but it's still there. And I don't know how to edit the tick. So I'll just talk about the Aussie. So we went down. We didn't get to 5989. We had a bad day yesterday on the ASX. 6089 to 6105 is now resistance. If you can get up and through that, then it can go for a bit of a gallop, but it's got to get up and through that. So I wouldn't be surprised to see China do better today. I haven't really spoken about Bitcoin. There's still not much going on, 66 something. It does look like it's trying to walk higher. It does look like it wants to go and have a test up here at 7,000, 7,100. That's the way, you know, if you just draw a little support line there, a little top there, if it breaks, it can run to 7,100. The volatility is washing out of Bitcoin. For me, that is both a double-edged sword, I guess. You know, it'll push many people away from the market, but it'll also encourage people who don't like too much volatility but like the asset class to come in as well. So I'll have to wait and see how that happens. At the moment, you know, it's sort of 74, 100, 56, 50 is kind of the parameters that I'm looking at. Right, so that's it from me. NAB Business Survey today. German trade, NFIB survey in the US. That's a big enough and an important enough survey to get people noticing. So, but not a lot. We'll see how China reacts today. We'll see what the US does when everybody's back at their desk tomorrow. Things are breaking down, folks. That's really interesting. Keep an eye on that. The cross-market approach that I take. When you look at foreign exchange, you look at different things, you can see that relationships aren't as strong as they were. That's good news, but it also is a little bit destabilizing. So we'll talk more about that tomorrow. Bye for now.